Everyone, Paul here. Today I'm going to go over kind of the strategy. Now, if you saw my last video, I went over like a 90-day strategy. So this is based off of a bigger balance. So you need, if you saw the last video, you need probably at least a good enough balance to be able to write it out for 90 days. So I think we saw the numbers in there before. That was about 20K for 90 days with one contract. So you do it on that. So if you want to do, you do 20K for one contract, 40K for two contracts, and you write it out for 90 days. Today I'm going to show you what I do on a intraday level, the price point that I look for when I'm trading SPY, and how I scale it up. So this might be an easier strategy for people. What I do is I always want to buy my expirations. I try to buy my expirations at least 5 days out, somewhere around there. Anywhere 5 days from the date that you put it in. And that's really just to protect it in case anything happens. So I'm going to show you, we're going to look at the chart real quick and just briefly glance at it. And we're going to make the decision because these, the trades that we make are going to be intraday basically. So we want to try and make the results today, the same day. But just in case something happens, you have 5 days for the market to correct itself. So the goal of this strategy is to do it on an intraday, but I do buy these out 5 days out just to try to protect the account in case anything happens. So I'm going to show you, we're going to look at the chart real quick, and we're going to look at, we'll look at it with the parallel channels and the MACD, and we'll get an idea what the S&P is doing, and then I'll get a general idea of which option contract I would buy if I want to do this on intraday level. Okay, so to kind of understand what I've done here is I drew a parallel channel on the S&P, and I basically drew it from here to here because you got two touch points. You got one right here, and this is a parallel channel going upwards. So we know that just looking at the parallel channel, we know that SPY is currently on a direction of going up. So up is the direction that we would be focusing on. So then we have our MACD here. And what the MACD here, I have my settings changed to 13 and 48. And so other than that, what I want to do is, since we know the direction is going up, what we want to look for is basically, we know the direction is going up. So what we want to wait for is a pullback. So where it is and where it stopped yesterday was right up here. So what we want to look for is a pullback. So we want to wait for the market to pull back a little bit. And we can look at our MACD as well here, and we can wait for it to come down a little bit. You can go to a smaller time frame if you want. But basically, we have to wait for a little bit of a pullback before we come back and enter again, because we could see we are on an ascending, it's ascending upwards, basically. So now that we know the direction, we're going to go and look at what price point I would buy these contracts at. Today is the 11th of November. So what I would look for is I would go and I would count 5 days out. So we want today, the 12th, which is tomorrow, the 13th, the 14th, 15th, 17th. So I probably would keep my contracts to about the 18th. So I would count 5 days, 5 days from today. And since we know that we want to look for it to go up, we don't want to do it right now. We do this when we see the move, because right now price has to come down. So, but I'll show you which ones I look for. I don't do more than, see right about here where we see this $2,000 contract, basically. So per contract's about $2,000. So this is the one I would root for. And I would try to get close to this dot as possible. But, you know, you want to wait for the market to open. So basically what I would do for this strategy is we have a contract 5 days out. And we have one contract here. So it depends on your balance, but basically every 2,000 is how I calculate how many contracts to use. But what I personally do is I just slowly scale up. So basically I start with one. If my balance is about 2,000, I start with one and then I scale it up. So I just slowly scale it up. I go to one. And I don't skip contracts basically. So I'll start with one and then I'll go to two and then I'll go to three. So basically I will not, like, even if I get gains and stuff like that, let's say I have a good trade and let's say I make a pretty decent amount of money, I would still just be scaling up. I will go to 3 and 4. You don't want to risk as much. You want to just slowly scale up. So you're slowly growing here. So even if you make a lot in the gains, I'm slowly going to be scaling up. I'm not going to miss a contract. So basically you go from two contracts would be 4,000. 3 contracts would be 6,000. 4 contracts, which is basically where I am right now. This is the current, every time I do a trade, I'm basically at 4 contracts. So even if I get a good trade, I'm not going to skip to like 10. Like let's say today was a good trade and I have enough to do 10 contracts now. I will not skip 5, 6, 7, 8, and 9. I will continue to scale up with 5, have a couple good trades with 5, and then go to 6, and then just slowly scale up. Even if I get good trades, I'm slowly scaling up. I'm checking the box of every time I go into another contract, basically. So I do not skip contracts. So, like, for example, if I'm at 4 right now, I'll do that for maybe a week. I'll do 4 for maybe a week, and then even if I get good trades, I'll go to 5. Even if I have good results, I'm still slowly scaling up. I'm not going to jump ahead, basically. So basically, this is how you calculate it. So, when you have one contract here, when you have their 2,000, and 2,000 is like the bare minimum, I would say, for if you want to do it this way. You're buying your contracts 5 days out, and you want to do about 2,000, and you basically, with one contract, you basically make $100 for every dollar. So once you get good at that, then you go to 2. You'll go to 2 contracts, and once you're at 2 contracts, you'll make $200 for every dollar. And once you get a couple good trades with that one, you'll go to 3. And once you get to 3 contracts, you'll be making that same dollar. That same dollar will now make you $300 every dollar. And then you got to go to 4, which you're then making basically pretty much a full-time salary of most people. So, you have 4 contracts, you wait it out for 5 days, and all you have to do is find $1 difference in price, and that's typically the average salary of most people working, basically. And then you want to go, you have a couple good trades of this one, then you want to go to 5. You don't skip, so you would go to 5, and then you're making $500 for every dollar. And then you go to 6. Go to 6, you'll be making $600 for right here. 6, you make $600 for every dollar. And then you want to go to 7. And 7, you're making $700 for every dollar. And you go to 8. And with the 8, you're making $800 for every dollar. And then you go to 9. And with 9, you're making $900 for every dollar. And then 10, which is the milestone that I personally want to get to, because once you make it to 10, you're making $1,000 for every dollar. And then from this point on, you can just keep scaling it. Once you're at 10, you're making $1,000 for every dollar move. But it's good practice to start down from one. Start down from one, buy your contracts 5 days out, and scale your way up. Do not skip your contracts. Go to 1, go to 2, go to 3, go to all the way to 10. And even if you're in gains, I would still continue to go up to 11 contracts, 12 contracts, and eventually work your way up to about 100. So when these contracts are going on, and I'll just give you an example of 4 because that's where I'm currently at. Let's say you have 4 contracts and you find that dollar, and let's say that this happens in a day. So even though you bought the contracts 5 days out, you can take profit anytime you want. Now, I do this mainly on an intraday. I only buy the contracts 5 days out to protect the account as much as I can. That's why I buy them 5 days out. So I know I haven't made a video out in a while, mainly for 2 reasons. I've been busy, and I basically found the strategy that works for me, so there's really no point in teaching you guys different formulas. When I found what works for me, and I'll go over this, I don't think I've talked about the strategy, what works for me. It's very simple. I went over it in this video. It's basically parallel channels in MACD, and it works really well for me. Identify the trend and direction through the parallel channels, and look at your MACD and wait for it to, turn around, and you just get back in when it goes back in that direction. So basically, it works really well. It's been bringing me good results for the last 2 months. So I don't really think I need to teach other strategies onto this. But what I want to do is I want to still give out signals. I might make a membership on my channel to point out signals with these strategies, but I'm thinking about it. But I'll try to make some more videos out. There's a damn coyote coming right up by my car. Anyway, I see that coyote right there. See that coyote?